This is your Wall Street wake-up call. The markets now have earnings season and the U.S. presidential election in focus. For more, let's get straight to London. I'm joined now by Craig Erlam, a senior market analyst at Oanda. So, Craig, it seems like earnings have taken a back seat so far this year as BREXIT, oil has taken focus. But third quarter earnings season starts tomorrow, and they are expected to decline year over year. But do you think we'll finally start to see earnings move the markets like they traditionally do?
I think so. I think a number of things have passed over the course of 2016 that have been seen to be more important than an individual earnings season. I think we're hitting a period now whereby the US presidential election, of course, is extremely important to the markets. But I think people want to start seeing earnings growth again. We've had 5 consecutive quarters of declining earnings growth, and I think it's about time it's about time that we start to actually see some signs that the US is actually growing in a way that the Federal Reserve keeps trying to convince us that it is. And the fact that the markets are now actually pricing in a December rate hike, in my view, makes it increasingly important for value from a valuations perspective.
All right, and we also have the U.S. presidential election in just 1 month. Now, you're in London, but of course, from a global perspective, seems like investors are pricing in a Clinton victory, and perhaps that would be a more safer choice for the markets, because many view Trump as sort of an uncertain choice, at least in terms of his policies.
I think Donald Trump is largely just viewed as disruptive, and I think the biggest concern for investors right now is the trade deals which he's threatening to tear up, or he's threatening to renegotiate, which could be seriously detrimental for US companies and create that uncertainty that Brexit has caused for the UK. The fact that we've seen the peso, for example, rally 1.8% today shows that investors, in my view, see the damage caused over the weekend by the reports and the debate last night shows that markets at least believe that Hillary Clinton has edged further into the lead. But I guess one thing we learned from the Brexit vote is that you can't always read too much into what the markets are doing, because they do have a tendency to be very wrong.
All right, well, you mentioned the peso. On the currency note, I mean, of course, we saw the pound decline further against the dollar this morning, certainly after last week's flash crash. Is that another sort of wild card in the markets? I mean, Brexit negotiations aren't set to start until another 6 months from now, but certainly that is a factor investors should be pricing in at this time.
Absolutely. I think there's still a huge amount of uncertainty around the UK outlook, given that Brexit in reality hasn't even begun yet because Article 50 hasn't been triggered. I think really investors were always hoping that some deal would be struck that would be both mutually beneficial for the UK and the European Union. But all this rhetoric that we're now getting from Theresa May about a hard Brexit, from Francois Hollande of France talking about having to get a hard deal against the UK as well, has made people maybe wake up and see that maybe the deal isn't going to be that beneficial for the UK at all, or at least the possibility is that the deal's not going to be okay. And moreover, it shows that the leaders are willing to accept a deal that may not necessarily be good for the UK in the short to medium term. And that really did cause a jolt in the markets last week. It created heightened uncertainty. We saw an increasing number of shorts on the pound in the markets, which I think really led to what happened on Friday. The fact that we had such thin liquidity during those hours, and yet the shorts were building, I think really did create additional fear around the pound, and I think that's something that we can expect to see going forward. Maybe not something in lines of the flash crash, but rapid depreciations of the pound, certainly.
Yeah, we saw the pound down 6% against the dollar in just 2 minutes on Friday. All right, Craig Erlam from Oanda in London. Craig, thanks for your time.
Thank you.
I'm Scott Gam, and you're watching The Street.